Hi everyone, hope you're all doing well. Today I'm going to share with you the stock that I bought last week. So last week I only bought one stock, and today I'm just going to update you with that, so it just keeps with that transparency, so you know what I'm buying, know what I'm selling. Even though there's not a lot of selling going on at the moment with the market and the valuations they're at, it's more the buying opportunity now, so that's why you probably won't see me actually mention too much selling at the moment. Most of the time it'll just be buying at the moment. And yeah, last week I bought one stock, so I'll share that with you guys just so you can keep up to date with what's going on with me personally. So we'll take a look. I've not bought this stock for nearly a year now, so yeah, we'll have a look at this stock. So if you do want to know when I'm buying and selling companies in real time rather than an update a week or two after I actually buy or sell these companies, then make sure to join the Patreon. Link is in the description. On there I post live buy and sell alerts, as well as posting 2 exclusive videos a week on there. Recently this week I've done my UK portfolio review, and in the next few hours I'll be posting a review from stock earnings from last week. As well as that, there's a Discord with 600 members to talk to, and it's only £5 a month, which is pretty good going if I do say so myself. Trying to be not trying to be biased here, it only works out as nearly 10p a day, which is pretty good going. So yeah, if you do want to join that, link is in the description. But getting onto the stock today, so the one stock that I bought last week was S4 Capital, a UK company, a growth UK company, and I'm a big fan of this company. It used to be my biggest position, it's now my second biggest position, just because I've been buying Boohoo so heavy because it's been dipping so much. But now S4 Capital has dipped so much, I am now buying up this stock as well, and increasing my stake in my second biggest position on the UK scene. So S4 Capital is a digital advertising agency. It was actually only founded in 2016. So when you consider this company has a market cap now of 2 billion, it used to be more than that until it had its massive drop that it's been on. But to be founded in 2016, and when I show you the financials this company's putting in that amount of time, is just a credit to how good this company is and the management team, which we'll speak about in a second. Now, actually going on to the stock itself, you'll see here that there was a period of time where S4 Capital didn't do anything. I think it was only until this point here, actually, it was they merged with a shell company to go onto the stock market. So really, they've only been on the stock market since 2018. But you can see for quite a long period of time, it really didn't do too much until we started getting towards the back end of 2019. I say not too much, but it's still putting a 31% return, which is still fantastic. And then it started to get a bit more of attention. We hit the CV dip, and then the stock has been on a very good run. And then it peaked out around about 10th of September, where we started seeing a lot of these growth stocks, around that back end of that 2021 period. You'll see a lot of growth stocks have just took an absolute beating, and yeah, that's when it went from being nearly, I think, just over a £4 billion company, or £8.22, and has just over the course of 6 months nearly has lost half its valuation, which is absolutely crazy. And when you look at these sort of things, you do look at this kind of jump here and think, okay, did this company start to get to stretch valuations? And sure, it's due a little bit of a pullback, but when the financials have just been just keep it on improving, which we'll go through in a second, when you consider that, and the stock is just lost half its value, like going, okay, now is this a little bit stupid? Is this now a overreaction in the share price? Has this been way too sold off? And that's what I thought it is right now, and that's why I've been buying this stock once again. For me personally, when you go back to nearly a year ago, this stock is nearly down on a year ago. The last time this stock was at these sort of prices was around September time 2020. So this is an overreaction that I have been buying up. I am going to say this is that it does always make me laugh, because I'm just going to say this because I do see this point made in the comment section quite a few times, and a lot of the time people will go and say something like, oh, you're in the stock for a year and then you're down on a position, it's absolutely terrible, worst investment ever. And you got to realise that in that time frame when the stock went up and up and up and up, you got to remember that, firstly for me, this is what you want to do. When these stocks start going on this good run, that's when you start being a little bit fearful. You think, oh, this is going on a good run, do I be careful? Do I trim some profit? And for me personally, this is a stock that I trimmed some profit on this run up, which you should do. And now that it's going down, you don't look at that in fear, you look at that as a buying opportunity, where you can buy back into them prices. I think this perfectly sums up a market cycle here. The times when you want to be buying and the times when you want to be cautious, and it just makes me laugh. I've seen this quite a bit recently, the way that this has been the opposite way around, and people now were seeing this dip, and rather than being greedy, be fearful to a dip. This is a fantastic buying opportunity and a fantastic growth company. Now, without doubt, one of the main reasons why I bought this company is because of the management team here. I would say that this is probably the best management team for a UK stock that I own. I think they execute absolutely amazing. I think the only ones that would come close to it on the UK scene, IO, and I think Greggs has a great management team with Richard Whiteside, but obviously he's going to be leaving Greggs in the next coming few months as he retires. So obviously that's going to be a bit of a change up there. Potentially Hollywood Bowl. I feel Hollywood Bowl have a great management team. But I'd say that my strongest management team is S4 Capital, and that's why I have allocated quite a big percentage of my UK portfolio to these guys, is because I have confidence in the management team that will execute very well, experienced, have a history of executing. When Martin Sorrell set up WPP, another advertising company, and got that to a multi-billion company, and then moved away. Obviously, there was a few more issues than that. If you want a bit more research, you can go do that. And then I feel like now starting up S4 Capital, he's basically learned everything from there and made it even better, and also has a bit of a bee in his bonnet and wants to get bigger than them. And I think he will do that. And when you look at his execution so far, founded in 2016, already a 2 billion company, was a 4 billion company. He is well under his way here, and I do believe that S4 Capital has the potential to get to a 10 plus billion company in the next few years. Now, obviously, that is on the high side of expectations. In the next kind of few years, I would at least expect this stock to bring in a 2x return for me. But over the longer term, I can easily see with this company, with the growth rates they're on at the moment, I could easily see this being more than that. So that's kind of my aims with there. But yeah, with Martin Sorrell here, I think that obviously he has a great history. Obviously, he's showing in S4 Capital as well. He's executing absolutely amazing in here. It was interesting to see only a few months ago that he came out and said that he's potentially, and I made a separate video on this if you do want to check it out, he's potentially looking to move London from the London Stock Exchange for SR Capital into Wall Street on the New York Stock Exchange, because he believes that now the company is way undervalued, especially with the sell-off that it's been on, which would be interesting to see if that happens. I feel like they are starting to go from just being a UK, Europe-based company. They've made a lot of acquisitions in the last kind of 12 months, especially, to expand into that US side. So if a lot of their more income starts coming in through the US side of it, and obviously more than likely if they were on the New York Stock Exchange, I reckon they would, with the growth rates that you're on, for example, the trade desk, when you look at the valuations that trades at and very similar growth rates, this is very undervalued, and it could potentially command a higher valuation if it was on the New York Stock Exchange. But it just shows you the aggression that he has, the aggression to just expand this company and get that valuation higher and higher. Now, there's a lot of slideshows that I could show you, because the performance they've had over the last 12 months especially has been so good, but I thought I'd just go for the Q3 performance. The Q3 performance once again was another great quarter. Reported revenue up 106%, reported gross profit up 92%. Q3 like-for-like revenue, obviously not taking into considerations a lot of the acquisitions they made, because they are very aggressive on the acquisitions to help them grow fast. Q3 like-for-like revenue up 56%, so it's not even like these acquisitions are just boosting up the revenue. The company is naturally growing, and these acquisitions, the aggressive acquisitions, they're making it help them grow even faster. And as you can see here, they're focused on building that revenue up, but if you look at gross margins and the profitability side of it, it's actually pretty good. So it won't be a surprise when this starts maturing a lot more. They will put very good amounts of profitability in. And if you look at the actual expectations of this company through 2021, and let's not forget, in 2021 you'd think, okay, if you look at the share price, you're thinking this company's done absolutely terrible this year financially. Now, if we just actually have a quick look at the financials again, the company trading in line with external top line expectations, surpassing the third guidance revision from 40% from 25% at the beginning of 2021. So you look at it, they've kind of just, they started off, quite conservative guidance, and they've just ramped it up. And this company is well ahead of where they were supposed to be, and that's got no reflection in the share price. And it's not like we're talking about a company here that got to, crazy stretch valuations. I would argue that potentially it was maybe a little higher valuation, but to be back down at £4 range is just absolutely a crazy sell-off, and it kind of sums up why I'm kind of just buying this company. And you look at the clients they're landing, like they have so many strong clients here, likes of Google, Netflix, P&G, PayPal, Amazon, Facebook. These are, expanding. A lot of the businesses that are coming to them keep using S4 Capital because they're so good at what they do. They're so much better than what they do compared to everyone else, and they just keep landing new clients. every single quarter they're landing really big clients, and that has expanded to the diverse income stream now. If you look at 2020 Q3 to 2021 Q3, if you look at the clients that bring in above 10 million, they had 2, now they have 6. If you look at the smaller amounts of clients that bring in 0.1 to 1 million, 227 to 407 million. So a lot of these partnerships or the clients they're getting are expanding such a quick rate as well. And a quick look to the summary and outlook, you can see here there was 6 whoppers achieved in 2021. That's what they class as major clients. There's 19 more identified as potentials over the coming years. The TAM, digital media, marketing services, trade budgets and digital transformation, forecast to grow by 15 to 20% per annum over the next 5 years, which is a massive growth sector that we're currently in at the moment. Strong pipeline of M&A across all practice areas and geographies, which we know they've done that previously, and 4 3-year plan 2022 for calls for doubling of the top and bottom line organically, and 22 budget targets 25% organic growth. So you can see here, even still, the growth isn't going to slow down. They are aggressively expanding as well. And if we have a look down at the valuation here, you can see that currently there's no P ratio because it's not profitable. It trades at 4.4 times sales, which is very cheap for a company that is putting this sort of growth rate with these sort of gross margins. Like we talked about earlier, Trade Desk is at least above a 30. So yeah, unbelievable from that point of view. What was interesting is Simple Wall Street actually have this as currently undervalued. They say it's 51% undervalued. Don't always agree with their valuations, as you guys know. So that's what they're saying anyway. Future growth wise, I mean, just look at this. You look at the execution here. 2019, 215 million. 2020, 342 million. What they're going to do this year, 653 million. Yeah, that is, that's nearly double increase on the revenue, which is great. Chance of making profitability. And if you look at what they're going to do in the next 12 months, they're going to go from 653 million to 908 million. This will be nearly a company that's nearly putting in a billion amount of revenue by the end of the year. And if we just go down here, it's currently valued at 2.1 billion. So yeah, it'll be nearly trading at like a 2x sales at the end of this year. And also you consider there's a good chance to start bringing a lot more of that profitability in as well. So you've got a company here that's growing 50%, also trading at 2x sales, huge amounts of profit, not losing a lot of money, the potential to ramp up that profitability a huge amount, or a profitable growth company growing at these sort of rates, which I'm sure many of you guys know can sometimes be quite uncommon about this. And no one's kind of predicting this forecast to slow down. So yeah, obviously great from that point of view. Financial health wise, it's still very strong considering the amount of acquisitions they've made as well. They've got 15% debt to equity. They've got 112 million in debt, and in cash they've got 119 million, which is fine. They've got enough cash to pay off the whole debt if they wanted to. So it's still a very strong balance sheet you have here. There's been a bit of action in the insider ownership of the company itself. There's been 2 sellers here, which is Paul Roy. But what's been interesting, you've seen Martin Sorrell here had bought some shares in the 19th of January, which was 52,000. He bought some on the 7th of January, which was 53,000. And he also bought on the 17th of May, which was another 51,000. So, you talk about backing your company, and even the chief growth officer as well here, Scott Spirit, has been picking up quite a few shares as well. So that's a really bullish sign as well, that he keeps picking up a lot of shares in this company. And you'll see here there's a good ownership inside the company as well. Martin Sorrell owns 10% of the company here. S4 Capital Employee Stock Ownership Plan currently owns 9% of the company as well. And there's also a couple of other insiders that hold a decent amount of stake in the company, which is a positive sign. So overall, you can see that this company is trading at quite cheap valuations. The growth is absolutely amazing. Good balance sheet, management team executing, great management team. So there's not really much you can dislike about this company. It's a profitable growth company basically, with really good growth rates at a cheap valuation. And when you think down at the back end of this year, the end of 2022, this company is going to be trading nearly down at a 2x sales. This company, you'd argue that when you compare it to some competitors in here, you'd say that easily this could be trading in the range of 10 to 15 times sales, and that's without factoring, okay, what if this company puts in amazing growth in the next 5 years. The ramp up that profitability is quite scary when you think about this, and yeah, it's why it's my second biggest position, and it's why it used to be my biggest position. It could easily be my biggest position again, but yeah, it's a great company. It's a great company. One of the gems that is on the UK stock market. You know, quite often we lose a lot of these gems at the moment to other stock exchanges, and yeah, it's a great company. So I did buy some more shares in that one. Hope you enjoyed the video. If you could, hit the like button. If you're new, subscribe, and I'll see you next video.